Gold prices heading towards 1800. We'll be talking about this and more on Technically Speaking with Jim Wyckoff. As always, great to see you, Jim.
Good to see you, Daniela.
All right, Jim, let's start off with one of today's main headlines. Italian Prime Minister Silvio Berlusconi hanging on by a string in a key vote earlier this morning. What does this mean for the markets?
Well, the marketplace in general and the precious metals and gold are still looking very closely at the latest developments coming out of the European Union sovereign debt crisis. And of course, this week it's Italy that's on the front burner. Last week it was Greece. Who knows what it's going to be next week? The bottom line is the precious metals and especially gold are seeing safe haven demand driven to them by the EU debt crisis. And I think the marketplace perceives that this crisis is dragging on. It's not getting any better, and it's going to continue to be a bullish underlying factor for the precious metals and especially for gold.
So, Jim, Italy has one of the largest bond markets in the world. Right now, their bond yield levels soaring into the danger zone territory. Does this have an impact on gold?
Sure it does. If those bond yields rise just a little bit further, say about 7%, the marketplace is going to perceive that as meaning that the Italian debt situation is spinning out of control, with it being unlikely that the situation can be resolved. And that's going to drive even more demand toward gold.
All right, Jim, in your AM report this morning, you said overall there is safe haven investor demand. Is that your consensus for the week?
Yes, that has been the case and will continue to be the case. Not only is the EU debt crisis bullish for gold, but also the likelihood that the European Central Bank is going to have to embark on more monetary stimulus measures. The fact that the U.S. Federal Reserve may even do the same at some point to help revive its economy, all that augurs in a bullish fashion for the precious metals and especially gold.
Okay, Jim, let's now look at some key technical points you are looking at.
Well, we came very close on Tuesday and late yesterday in moving above psychological resistance at $1,800 an ounce. If we do that, and we may do that by the time this is posted on the Kitco.com website, that's going to be a bullish indicator. That's going to suggest the next upside price objective for December Comex gold, 1850, above that psychological resistance at 1900, and then you've got the all-time high at 1923 and change that would be attainable. So the market is in an overall bullish technical posture. The path of least resistance for prices remains sideways to higher.
All right, Jim, for our viewers who are new to the program, I'd like to introduce them to some terminology we often hear from you. You just mentioned psychological resistance. Can you explain that?
That means that's just simply a round number. In gold, psychological numbers are 1,000, 1,500, 1,600, 1,700, just round numbers as opposed to numbers with fractions. In crude oil, it would be $100 a barrel or $90 a barrel, simply a round number that has been proven by classic technical analysis to be important figures.
Moving on over to silver now, Jim. The metal is closing in on its last week's high. Is this a return for the white metal?
Yeah, we are in a 6-week-old uptrend in silver. We take out last week's high. That's going to be a bullish technical clue to suggest still more upside. But the important thing about silver is it's going to continue to follow gold. The thing about silver, I've mentioned this in the past, silver does not have quite the allure from a safe haven asset that does gold. So, but nonetheless, silver is going to be a follower of gold. The technicals in silver have turned more bullish recently.
All right, Jim, overall, you'd say a bullish landscape for silver and gold this week.
Absolutely.
All right, Jim, final thoughts for investors watching.
Well, the EU debt crisis is going to continue to play out. Any surprises coming out of that situation is going to be bullish for gold. In fact, for gold, the bulls are just benefiting from two ways: the safe haven buying, and then also when you see the risk on days when the marketplace feels a little bit more comfortable, you see commodity classes rally, and that also boosts gold. So gold's been getting a double benefit here recently.
Excellent, Jim. Thank you so much. We'll see you again next week.
Until next time.
And you can email me your comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.